Netflix used to be the ultimate growth stock. It disrupted Hollywood, destroyed cable TV, created an entire industry on the streaming industry. Recently, some interesting things happened. Netflix stock dipped, investors started to question growth. Some even wondered if the streaming giant was finally slowing down. The market changed its mind. The stock recovered and started to recover again. The big question investors are asking is simple. Is Netflix about to start another major move higher, or is it just another temporary bounce? Because the answers could determine whether Netflix remains one of the most powerful media companies in the world, or if this is just the beginning of letting it break down. Let's break that down. Even the strongest companies experience moments like in the past for Netflix where markets start to questioning their future. Netflix recently went through one of these moments. After a strong run, the stock experienced a notable pullback. When major tech companies stocks dip, investors immediately start to ask why is this happening? Several concerns began circulating around Netflix. First, it was subscriber growth. Are they losing customers? Netflix already has hundreds and millions of users worldwide, which means maintaining rapid growth becomes harder as companies scale. Second, there was competition increases. Decades ago, it was just Netflix alone dominating the streaming business almost completely. You have blockbusters. You couldn't even compare. There was so much in the brick and mortar, they couldn't compete with Netflix. Today, now you have the industry looks very different. Companies like Disney, Amazon, Apple, and others are all spending billions of dollars to try to capture streaming audiences. Suddenly, Netflix wasn't just competing against traditional television, it was competing against some of the most biggest companies in the world. A third of the investors were concerned about content spending. Content is everything, as they say. Producing blockbuster shows, movies is extremely expensive. So some of these major Netflix producers can cost hundreds of millions of dollars just to even work with. When these stocks dipped, the market began to wonder, is Netflix overspending? Is it too good to be true? No, and can Netflix continue to grow fast enough to justify these costs? The story didn't end there. After the dip recently, Netflix started to recover faster than many investors expected. The reason was simple. The core business remained extremely strong. Netflix still is the largest streaming platform in the world and a massive global user base it has. These two strategic moves helped drive the recovery. The first was the password sharing crackdown that we all saw. First was that. Next was for years, millions of households were watching Netflix without paying. The entire group of friends or families that you knew were using the same account. That was going on. No shame there. At one point, Netflix estimated over 100 million households were sharing passwords. That's 100 million households that they weren't paying. When the company finally cracked down on this, analysts expected a wave of cancellations. Instead, they had millions of viewers creating their own accounts going forward. This move helped decrease paying subscribers and surprised many investors. After that happened, another major shift was Netflix introducing ad-supported subscriptions tiers. For most of their history, Netflix avoided advertising completely. The platform was built around a simple promise: no ads, just content. Eventually, Netflix realized something was more important than that. Advertising is one of the most profitable parts of the media industry. Traditional television could have much to say about that. Networks generated enormous revenue from these ads. Platforms like YouTube have built in massive businesses around advertising. Netflix introduced a low price subscription that included these ads. This move is already extremely important for two reasons. First, it attracts price-sensitive users who want a cheaper alternative. Second, it allows Netflix to build an entire new advertising business. This advertising business can be already increasingly profitable once it scales. If Netflix succeeds here, the company could unlock billions of additional revenue beyond subscriptions. That's possible, help fueled by the stock's recovery and the run-up. On the streaming wars, even though Netflix has recovered, competition is still intense. The so-called streaming wars is far from over. Major competitors like Disney Plus, Amazon Prime, Apple TV, HBO, and Paramount Plus. These companies aren't small competitors. They're backed by some of the most powerful media companies and technology companies in the world. Disney controls franchises like Marvel and Star Wars. Amazon, massive financial resources. Apple continues to investing billions into premium content. Despite these competitions, Netflix still maintains several advantages. These advantages are critical to the company's long-term success. The first advantage is a global scale. Why Netflix has the edge. It is the global scale. Netflix operates in over 190 countries. This means these companies produce successful shows. It can reach audiences all over the world. A single hit series can generate massive engagement globally. A second advantage is data. Netflix tracks viewing habits across hundreds of millions of users. They know what people watch and when they stop watching, what generates these binges, and which actors and styles attracts viewers. As data helps Netflix design content more strategically, shows like Stranger Things, Squid Games, Wednesday become global hits, partly because Netflix understands audiences' behavior so well. The third advantage is financial. Netflix is producing billions of free cash flow. For years, critics believed the company spent way too much on content and would never create strong profits. Today, Netflix has improved its financial positions significantly. This gives the company flexible ability to invest, expand, and strengthen their business through the stratosphere. But there's still risks to watch out for with Netflix. Even strong companies face risks, as Netflix is. The main risk is content costs. Increasing high quality entertainment is extremely expensive. If Netflix fails to produce enough hit shows, subscriber engagement could decline. The second risk is competition. Other subscribing platforms continue investing heavily in content. Some competitors have massive ecosystems that extend beyond streaming. The third risk is market saturation. Global markets like United States, developed markets like United States and Netflix has already captured the large share of subscribers in the United States. It's pretty much capped out there. There's the future growth from other heavily more international markets. There's still plenty of room there. United States, we're all binging on Netflix. Can't get enough of that, and that's the number one is Netflix. Finally, investors must always consider alternatives. We as investors, we should consider alternatives, and then plus competitors that are out there. Plus, we need to consider the Netflix's valuation. Even great companies become overpriced stocks if expectations rise too quickly. That's the easy thing to do. The big picture in Netflix, what makes Netflix fascinating right now is that the company is still evolving. In early days, Netflix was a disruptive tech company transforming entertainment. Today, it's becoming much larger. Netflix is evolving into a global entertainment platform. The company is exploring new areas, including live programming, gaming, interactive content. These expansions may not dominate business today. They show how Netflix is thinking about long-term growth. All in all, the last when it dipped like that, it was such a great opportunity. Hope everybody took advantage of that and didn't think it was gonna drop forever past 70. It's I even think it's with considering all these how much room Netflix has to go, I think it's a great opportunity. My 2 cents here. I'm not a financial advisor like that. And to conclude here, Netflix has already reshaped the entertainment industry once. Now the company is entering its next chapter. The recent dip in the stock market stock created uncertainty. The recovery and run-up shows that investors still believe the company's long-term potential. Global scale and new advertising revenue involving cash flow, Netflix remains one of the most powerful platforms in the media. The real question investors are asking now is simple. Is this recovery just the beginning of Netflix run-up, or is it simply a pause before the next battle in the streaming wars? Because Netflix continues in executing strategy successfully, the stock may still have a lot more room to run. That's the question we all have to ask ourselves as investors. You got to look at your own personal take, your own portfolio, and see where the road's going to take you. As far as I think Netflix isn't going away. It's not like a blockbuster going away. I think the sky's the limit. There's so much growth. They have so much content right now that they have right now that they own. I think the sky's the limit. Maybe Netflix is the next thing. Entertainment, that the run-up is still going to be going on after this split. You got to look to the movies. You got to look to the films. You got to watch these great shows. I think just the best shows out there, the best movies out there. I think Netflix is one of the greatest streaming service that it's been on the planet.